North Korea has just executed the largest crypto heist in history. The notorious Lazarus Group, a state-backed hacking collective, has stolen $1.5 billion worth of crypto from Dubai-based crypto exchange ByBit. But how did they pull off such a massive heist? And what does it mean for crypto investors worldwide? Let's break it down. Hey everyone, I'm Corey, a startup lawyer helping entrepreneurs decode law, technology, and innovation. Today we're diving into the ByBit hack, exploring how North Korea's Lazarus Group orchestrated this unprecedented theft, and discussing what investors need to do to protect their assets. If you trade crypto, invest in exchanges, or want to understand how such hacks impact the market, this video is going to be a must-watch for you. Important note, ByBit is an offshore exchange headquartered in Dubai, operating outside of strict US regulatory oversight, making it an attractive target for hackers. So here's what we'll cover in this video. What is North Korea's Lazarus Group? How they hacked ByBit and laundered the funds? What this means for investors in crypto markets? Will regulators crack down on crypto security and procedures? And how do you protect yourself from exchange hacks going forward? Let's get into it. Well, first, what is the Lazarus Group? The Lazarus Group is a North Korean state-backed hacking collective responsible for some of the biggest cyber heists in history, including $625 million Ronin Bridge breach in 2022, $101 million Bangladesh bank heist in 2016. What is their main goal? It is believed their main goal is to fund North Korea's nuclear weapons program. So how did they hack ByBit? The ByBit hack unfolded in several sophisticated phases. The first phase, spear phishing. Attackers conducted targeted phishing campaigns against key ByBit personnel, stealing sensitive information to access the exchange's user interface and cold wallet signers. Phase 2, unauthorized transactions. With access to private keys and signers, the hackers created malicious transactions, transferring approximately 401 Ethereum and other tokens valued at around $1.5 billion from ByBit's cold wallet to a wallet under the hackers' control. Phase 3, laundering the funds via Thorchain. New revelations show that Thorchain played a major role in laundering the stolen funds. The hackers used Thorchain's cross-chain swaps to convert their illicit crypto into other assets, making it extremely difficult for law enforcement to trace. This is a huge red flag for regulators who are already looking into DeFi privacy solutions. So next, will regulators crack down after this hack? Expect heavy scrutiny on decentralized exchanges or DEXs and of crypto mixers. Regulators may introduce mandatory tracking for DEX transactions, or things like know your customer rules could become stricter. Privacy tools like Thorchain and or mixers that obscure the identity of the owner on the blockchain could face additional legal challenges or scrutiny across the globe. Crypto firms may need to prepare for new compliance rules as a response if more hacks like this continue. So let's recap. North Korea's Lazarus Group just stole billions of dollars worth of crypto from ByBit. They used a mix of DEXs, crypto mixers, and Thorchain to launder the funds. ByBit is an offshore exchange in Dubai, and it's harder for regulators onshore to actually control. So expect more regulation on DeFi, mixers, and offshore exchanges, depending on different jurisdictions' approach to this issue and these risks around the world. Crypto hacks are getting more sophisticated, so don't wait until it's too late to secure your funds. Remember, not your keys, not your coins. Join me on the path to decoding law, technology, and innovation to grow your business. Don't forget to like, share, subscribe, and hit that notification bell. Until next time.